Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down substantially today. Dow Jones is down 1.1%, Nasdaq down 1, S&P 500 down 1%, Russell 2000 down 1.5%. You can see in the map here that all stocks are down. Tesla is leading everybody down 7%. We're going to talk about why. Meta is up slightly. Palantir is up slightly as well. Oil is also up $1 per barrel to $68, and the yield curve is up. Despite the plunge in markets, the yield curve is up quite substantially today. Wall Street indices extend decline after Trump slaps tariffs on Japan, South Korea. Wall Street's main indices extended their fall on Monday after US President Trump said he would impose a 25% tariff on goods from Japan and South Korea starting on August 1. This is material news. Let's dig into it. Trump tells Japan, South Korea leaders he's imposing 25% tariffs. President Trump on Monday said he was imposing a 25% tariffs on imports from both South Korea and Japan, and he warned that of added duties to countries embracing what he called anti-American policies of the BRICS bloc nations. Trump on social media posted letters sent to leaders of Japan and South Korea informing them of their duties, which he said would take effect August 1. He warned that those levels would go higher if the countries imposed tariffs in retaliation. Trump has begun sending out the letters to countries to notify them of the tariffs rates that they will face on exports to the US to go into effect on August 1. He said duties could go as high as 70%. Trump had grown openly frustrated with negotiations with Japan in particular, calling the nation spoiled and threatening tariffs as high as 35%. Talks with South Korea, however, had continued throughout the weekend. Here's where things stand with various other partners. China. The US has eased export restrictions on China for chip design software and ethane, a sign that trade tensions are calming between the two countries after they agreed to a framework to move forward to a larger deal. Vietnam. Trump said he had reached a trade deal with Vietnam, one that will see the country's imports face a 20% tariff, lower than the 46% he had threatened in April. He also said Vietnamese goods would face a higher 40% tariff on any transshipping when goods shipped from Vietnam originate from another country like China. European Union. The EU has signaled it is willing to accept a 10% universal tariff on many of its exports, but is seeking exemptions for sectors. Canada has scrapped its digital services tax that was set to affect large US technology companies. The White House said trade talks between two countries had resumed with a deal by mid July in focus. So you can see here, even the Vietnam is double what the markets were assuming what the base rate was going to be across all countries. European Union has 10% with some exemptions, so that seems to be relatively going well. China is still a wild card. President Trump posted two nearly identical letters addressed to leaders of Japan and South Korea, outlining new tariff rates on Monday. In the letters, Trump said he will place a 25% tariff on imports from two countries beginning August 1. Any goods that are transshipped through those countries to evade high tariffs will face the higher duties based on the country of origin. Japan faced a 25% tariff rate in April before the tariff paused, while South Korea had a 25% tariff applied to its goods. Trump claimed long-term and very persistent trade deficits were the basis for the new trade relationships. There will be no tariff if Japan or countries within your country decide to build or manufacture product within the United States. And in fact, we will do everything possible to get approvals quickly, professionally, and routinely. In other words, in a matter of weeks. Trump wrote in the letter to Japan posted on his Truth Social account. More letters are expected to come today. Let's move on to Treasury yields. Any questions, comments, you can leave it, and I'll get to it by the end of the live stream. Treasury yields climb ahead of auctions amid tariff uncertainty. Treasury yields rose Monday, led by long maturity tenors, as investors preoccupied with the potential fallout of US tariffs looked ahead to auctions later this week. Yields for 10 to 30-year treasuries climbed at least 5 basis points to the highest levels in more than a week, extending the sell-off sparked by strong June employment data released Thursday, ahead of Friday's U.S. holiday. Thursday's sell-off was led by short maturity tenors as it dimmed the outlook for Federal Reserve interest rate cuts this year. Yields reached session highs following a large seller-initiated block trade in long-dated Treasury futures. Negative sentiment was stoked by an array of factors, including fresh uncertainty about the tariffs timeline, U.S. budget legislation enacted over the weekend that's projected to widen the deficit, and the week's auction cycle 3 and 10-year notes and 30-year bonds beginning Tuesday. It's been very tricky to trade the bond market because there has been this push and pull between rates are going up to be cut and also the impacts of all these macro themes. Catherine Kaminsky, chief research strategist at Alpha Simplex Group, told Bloomberg Television. Traders hoping for clarity on the Trump administration's tariff agenda in connection with this July 9 deadline for countries to reach trade agreements still lack it. U.S. officials signaled that tariffs will kick in on August 1, allowing 3 more weeks of deal making as only a handful of agreements have been struck. Uncertainty has increased ahead of the July 9 trade deal deadline as investors are starting to gradually price in the risk that President Trump could once again escalate global trade tensions and thus deal a blow to the global economic outlook, said head of G10 FX research and strategy at Credit Agricole. Trump has said trading partners can expect a rate between 10% and 70%, implying some may have to shoulder higher tariffs than expected, though he suggested some deals are in the offing too. Adding to the uncertainty, Treasury Secretary Scott Bessent indicated some countries, like an agreement by Wednesday's deadline, will have the option of a 3-week extension to negotiate. Now let's switch to Tesla and Automotive, and now we're going to switch after that to some company-specific news. Tesla stock drops on Musk's battle with Trump over new political American Party loss of EV tax credits. William Blair downgraded Tesla stock on concern Trump's big beautiful bill could wipe out the company's regulatory credit sales. Tesla stock is still sliding on Monday after CEO Musk's latest foray into politics once again challenges President Trump. Separately, Wall Street is growing concerned over the loss of EV tax credits and regulatory credits stemming from Trump's one big beautiful bill. Over the weekend, Musk polled users on X about these polls that are manipulated by bots, so I'm going to skip that. Contains complaints about Trump's bills and everything by a factor. That's bullshit. Trump and Musk supporters hoped a recent detente would settle the matter, but it erupted again with Musk's latest foray. I'm saddened to watch Elon Musk go completely off the rails, essentially become a train wreck over the past 5 weeks, Trump responded in a Truth Social post. He even wants to start a third political party, despite the fact that they have never succeeded in the US. The system seems not designed for them. Musk's past strong critiques of the bill led to a massive fallout with Trump, with Tesla and Musk other businesses like SpaceX caught in the crosshairs. The battle between the two was too much for even Tesla bulls and investors to bear, who saw the stock pummeled a few weeks back before recovering. Very simply, Musk dividing deeper into politics and now trying to take on the Beltway establishment is exactly the opposite direction that Tesla investors and shareholders want him to take, Wedbush analyst Dan Ives wrote. After leaving the Trump administration and Doge, there was some initial relief from Tesla shareholders and big supporters. That relief lasted a very short time and now has taken a turn for the worst with this latest announcement. As if the political battles weren't enough, Trump also responded to a feature of the bill Musk privately groused over. It is a great bill, but unfortunately for Elon, it eliminates the ridiculous EV mandate, which would have forced everyone to buy an electric car in a short period of time, Trump said on Truth Social. I've been strongly opposed to that from the very beginning. A couple of notes about the overall US industry auto sales. Moderate yet steady. June auto sales volume is projected to reach 1.27 million, but there are only 24 selling days for the month. So adjusted for that, they are pretty flat. Anticipated June 25 volume translates to an estimated annual sales pace of 15.6 million, aligned with the May downshift, 15.7 million SAAR. Automakers and consumers alike continue to digest an uneasy, uncertain environment, said Chris Hobson, principal analyst at S&P Global. You can see the numbers here for light truck passenger cars as well. You can see light vehicle sales comparison. You can pause the video and watch it if you want to. But more importantly, battery electric vehicle sales. According to S&P Global Mobility new registration data, estimated share of BEV sales for both May and June is expected to be around 7% level, as BEV sales growth is moderating and share will be reflected of the stalled conditions for BEV demand. BEV share of sales hit over 8% in January, but fell in February and March before declining to below 70% in April. Continued development of BEV sales remains an assumption in the longer term S&P Global Mobility light vehicle sales forecast, although an unsettled regulatory incentive policy environment has raised the potential that future growth rates will be more mild. And you can see in this graph, US battery electric vehicle sales market share is about 7-8% for the last 2 years, 2.5 years. So it's stalled. And I think with these EV tax credits expiring, it may actually go down. People want hybrids. Now, a couple of company-specific news. We're going to just read the summary on these, and then we're going to call it a day. CoreWeave, Core Scientific stocks sink after companies confirm $9 billion deal amid AI data center boom. AI cloud computing giant CoreWeave announced a $9 billion all-stock acquisition of data center provider Core Scientific. The deal, expected to close in Q4, will expand CoreWeave's capabilities to support large-scale AI development by bringing in Core Scientific's nationwide data center infrastructure. Shares of both companies fell following the announcement, which is kind of interesting because usually the target company's stock increases in these announcements. Now, Daimler Truck announces $2 billion euro share buyback. Daimler Truck announced a new share buyback program worth up to 2 billion euros to be conducted over 2 years, started in the second half of 2025. And with that, thank you very much, everybody. And I will chat with you all next time. Take care.